Okay, and not to be overly repetitive, obviously, real estate and inflation sensitive does lower risk strategies. Our savings might not be as much, but the opportunity to collaborate and form joint ventures, whether they call special accounts or whatnot, is out there. With real estate, I would say a differentiation is a lot of our joint ventures are with operating companies, and occasionally we buy operating companies. And the reason we like those is we found that real estate still is a local business. You might call it a regional business, but finding the best opportunities in real estate, you have to have someone that has that local market expertise. And we found that if we have a team of people that has good product type expertise, they can quickly find the folks that have the local or regional market expertise and make those decisions quickly. So we really love the joint venture model, and you can see some of the highlights of things we've done. One thing that came up there is REITs. We've recently started doing REITs. That's collaborating with Global Equity, and we just recently did our first investment in REITs. But we don't have a lot of control over that, and we'll see over time how we can perform on that. But we need to put some resources in order to manage those. But our focus has always been joint ventures and REOCs. We're actually in closed session going to give you a good example of a REOC, so I'll wait for a detailed explanation of that. But like the other asset classes, the key is can we move? Are we part of the game? Are we on the first call list? And we strive to get in that position that the major players out there know to call CalSTRS, and then we have to be ready to make the decisions.
One of the things I wanted to go back on is just to keep in mind in terms of financial is that for a fund investment, you're probably going to pay a manager for a $300 million fund investment, maybe for, again, infrastructure, maybe $4 million a year. If we can cut that in half and then take that over a 10-year period, you're talking about a substantial savings. And that's the way I've sort of cemented in my brain is I can always go to a fund manager and give them money, or we can use co-investments to lower fees, or we can use accounts to lower fees. That's not, again, like the driving concern to lower fees, but it just is in your head is how can I do this differently and how can I do this better? So.
I wanted to summarize that segment by talking about the last 2 years we've spent time identifying our top collaborative investment strategies across the organization, across every asset class. We then spent time trying to understand what resources we need to implement that, and then estimating what would be the net benefit to us in the form of cost savings. And I think our baseline, the number we came up at after identifying the top 10 investment strategies was spending roughly $30 million in resources to reap $300 million in net benefits. But as we did scenario analysis on that, you can understand that there's a wide range of success, and the more successful we can be, we can drive numbers, and part of that depends on the resources. Just some base numbers that contemplated moving the staff side from something like 180 to just over 300 over the next 5 years to, as Paul was mentioning and Mike was mentioning, get the right people, attract and recruit the right people into the right positions. So I just wanted to provide that. We talked a lot about the past. This is a little bit more forward-looking relative to what the staff has been estimating. I wish that it's going to be a straight line to the future. We can get to those cost savings, we can succeed, but I think the reality is we've faced 3 significant challenges, 2 of which are out of our control, and 1 of which is primarily more in our control. Starting with the competition, we'll get into this a little bit more, but our competition is global. These funds are larger, they're more nimble, and they're oftentimes better resourced than us. They don't have regulatory constraints that we do, which is the second bucket. We're a money management firm within the confines of a governmental agency, and so many of the codes and rules that we're bound to, they're not bound to. Their only rule is to make money. Our rule is to make money and then abide by a number of other complexities. So I think given the competition, given the regulatory constraints, and given the evolution, our measurable track record of success, now is the time for us to bring more resources to bear. And I think that in order to be really meaningful for us to continue our track record, it needs to be a unified effort across the organization. So just starting on, to delve into a little bit more detail, this is a mapping of, 20 years ago in 2000, who was our competition in yellow. And if you were to go back 20 years from that, the whole map would likely be yellow. Because we all started at a similar point from the U.S. pension fund industry in sharing, similar constraints in regulatory environments, some different by states. But the likes of the state of Wisconsin can, remain TRS in Texas, the state of Florida. You've seen the evolutionary map, and we've evolved much beyond this peer set and competition now. 20 years forward today, our competition is global, and they don't share the same constraints that we do. They don't operate under government rules, and these are the likes in the blue: Canada, CPPIB, CDQ, Ontario Teachers. In the Netherlands or Nordics, APG, which we mentioned, PGGM.
Scott, can you explain the initials? Sorry, or just throw out the initials, the names.
I hope that I can actually explain the initials. I'm so used to saying these mnemonics. So Canadian Public Pension Investment Board. Case Depot, Ontario Teachers. APG we discussed, the largest Dutch. Yeah. And in Asia, GIC, the Government Investment Corp of Singapore. I'm almost afraid to say the rest of them.
I'm with you, Scott. I'm like,
China Investment Company,
ADIA.
Future Fund in Australia, obviously ADIA, which is Abu Dhabi, but Dubai, Qatar, Kuwait, thank you. And then clearly in France, Case Depot again, and quite a few of their funds, and then the Swedish funds, AP 1, 2, 3, 4, 5, 6, and 7.
Yeah. Well, the analogy I would draw is just simply one of athletics between high school and college. We've become the superstar high school athlete that over the last 30 years has evolved past our old peer set and set of competition and moved forward to compete at a much higher level with global competition. And I think Mike or Paul, did you want to chime in on anything?
No, I would say it's also a competition for the assets. So, Paul sees this on a regular basis of the large infrastructure activities peering with other groups. What we see it as when people want U.S. real estate, which is 85% of our focus, they're coming from all over the globe now. They're not just coming from the other states. And so we are competing with the GICs and government of Singapore and these various other groups that are funded very well. And so we're seeing the competition not just generally, but specifically on the assets that we're going after, which makes us have to partner with folks that can move fast.
And it's important to keep in mind some of those investors that you're competing against, you're competing for return on capital, they're competing for return of capital. They're looking for a safe haven.
Yeah.
So their return hurdles and their risk parameters are totally different than yours. And those are the same people looking for the same deals on a global basis.
Yeah.
So we've talked about our evolution, the investment strategies, our track record. I want us now to imagine CalSTR's future. How will we bring more assets in-house? How will we become the partner of choice globally? What organization do we need to become? What organization do we aspire to be? And I just want to say that the vision of the collaborative model is that. It started with Chris and the investment team. He's delegated to me to carry this forward. But the vision is spreading. It's spread. And I want to call out Cassandra in a positive way So nothing to worry about, but it's spreading. We started to talk about Deborah and I started to talk about this vision with Cassandra and her group, because our major push and emphasis is likely to be human talent acquisition. And so as we talked about that, it's moved its way into work plans from the comp committee perspective, and developing ideas on how to classify employees and et cetera. And from there, it's moved to all the other executives. And Deborah has been my co-pilot, but Jack and Grant and Brian and Julie, and I can't forget Lisa, who we overlap so much with that she's in almost every meeting. So I think work has really begun on this, and I think this is reflective of good governance by the board. You set the strategic plan, and in that strategic plan, you'll notice in Goal 1, Financial Governance, Objective D, leveraging all of CalSTRS to implement the collaborative model. And Goal 4, Organizational Strength, really deals squarely with the hiring of the type of talent that we need. So this vision is influenced and known by the board, staff, and I would argue that the rest of the organization at this point. This was a slide that actually took me, it's pretty simple, but it took me a long time to create, honestly.
Not very good at PowerPoint?
And it was really actually just the title of the slide that took a long time, because I'm trying to incorporate the board's direction in the strategic plan. I'm trying to encapsulate the vision of the collaborative model spreading across the organization, the optimism and the energy, the input of the board's consultants. And I think it's together we excel. We face tough competition. We are in the middle of regulatory environment, and we're going to need to harness all of CalSTRS resources. Together we excel. And so in partnership with the other business areas of CalSTRS, the investment staff have developed 4 pillars of resources that are going to be critical for us to succeed in this implementation. And I'll draw a couple of analogies. One analogy is throwing a rock into a pond, where you see the ripple effect. As we become more sophisticated, as we build out the investment team, it's going to have obvious ripple effects across the organization, where we're going to need a lot of support in order to succeed. But it's also about the efficiency and building creative solutions around these pillars. I'll start with the most important, that's human talent. And I want to go through some of these so you understand and get a flavor for some of the challenges that we're facing. As a government agency, we have very rigid hiring processes. We have difficulty creating new classifications and positions. We have difficulty even procuring headcount. And so
Explain that term, please, procuring headcount.
setting, if we have a 5-year vision of adding, roughly 120 employees or so, we have to.
So it's like procuring employees.
Procuring employees. Chris
I
might be
think
better.
he was getting at the budget process, the regulatory, no, but the approval process for you to even get approval from the legislature to add staff is a rigid process. The budget change, BCPs, budget change proposals.
Our competitors don't have it.
So one of the things I think we can do is consider reinventing our recruiting process. And I think I'll just give you a simple example that when I joined the organization, I remember setting up an interview schedule and I was good to go. And I got a call from the recruiter the night before and said, hey, did you complete your 4 or 5 essays, the exam that you needed to complete in order to qualify?
But you did those the night before?
Yeah, I stayed up pretty late that night, but it can be somewhat of a puzzle to navigate, and that's what I'm talking about. We need to reinvent this recruiting process. We need to be actively recruiting individuals, And I think we have to be creative in thinking about that. Now I was motivated because I wanted to work with Chris and CalSTRS, but I think that a part of me wanted to just disregard that email. And I think as Paul was saying we need to hire a higher level of direct investing experience. These are individuals that are not necessarily going to be easy to recruit. So what kind of compensation packages do we need? And as we grow as an organization, what classifications do we need to ensure that our staff can continue to grow as we grow? You add on to that, I think, just a statistic that we do have succession planning issues. I think there was a study I've seen where 40% of our leadership over the next 5 years is at retirement risk, which is another issue within this human talent that we need to deal with. Procurement, I think it's as simple as just to say that we have procurement code and others don't. So it's a constraint that can be unique to us and other pension funds. An easy example is for me when I was working at the University of California. I was in charge of investing in public real estate investment trusts. We got those investments done in 3 weeks. And Mike, I'll turn it to you. How through the procurement process, how did that?
Well, the process to get some REIT managers took us around 9 months. Took a little bit longer on some delays on our part, but it would have taken 9 months from start to finish because of the structure of how we go out for bid and to get managers. And we follow the structure that is normally done in the global equity program.
Travel, with all the communication technology we have today, transactions still get done on a face-to-face basis. You want to make an impression. You want to develop trust. You want to negotiate a deal. You need to fly out within. Well, I don't want to scare people, but within a day's notice. Essentially, you need to get to the place you need to get to. So we're exploring technology solutions. We're revisiting our processes and guidelines. The other category, legal, technology, financial services, and communications, a lot of this is akin to that rock throwing in. As we expand, we're going to need greater legal services, technology services, and financial services, and predicting how that's going to flow.
Scott, could you just hold one?
Scott, I was just going to add some of the commentary you and I had around the broader resource allocation at CalSTRS, just so the board appreciates the priorities of the organization. So, I think the way I would look at this for you is over the next 3 to 5 years for all of CalSTRS, because you're the resource allocators for the enterprise, but you tend to talk about these things in the investment committee, in benefits and services, in the boardroom as you sequentially deal with each project. So the way I'll be doing town halls with Lisa next week to talk about kind of what we're calling the big 3 projects. But I think all of us need to kind of embrace that thinking. And, we're well into the pension solution project. That's a $304 million project. Tomorrow, you'll see how many people are working on that. And it's hundreds of people in the building that work on that project. But it primarily touches technology, benefits and services, and financial services. You've authorized the expansion of the headquarters. That's another $300 million project that gets kicked off in August. Right now, that's fairly contained, the resource allocation to that. That's primarily Lisa's group that is doing the design work on facilities, and Julie's group that's doing the financing of it, and legal quite a bit on the project. So that's that. Obviously, this is about investments, but Scott's now highlighting for you the support part of the organization that goes through. So if you mapped all that out for looking for resource strain in the organization, Lisa Blatnick is front and center in this discussion, and all of her administrative staff. So they will be needing to help here. They clearly are driving the facilities project and they have pieces of pension solution as well. But do try to think of it in those three. You've got a $300 million headquarters expansion, a $304 million pension solution project, and this multi-year effort to really refresh the investment model. And we want the staff and the organization to think in those terms for really that's what's going to take up the airtime in the building for 3 to 5 years are those three efforts. Okay.
And thanks for drawing me back to the slide, because I forgot to make at least one more point, which these are significant challenges and constraints, and we're not going to be able to move the needle on a legislative front, but really our thought is to bring greater resources to bear and to try to be creative in thinking about solutions, whether they be technology solutions or others, to make a difference, because if we can move the needle incrementally more on our successful track record with the collaborative model. So I want to conclude with our action plan. Our action plan starts with accountability, and work has already been undergoing to develop a project list and a plan to bring to the board, hopefully in September. We look to hire a specialized consultant. This is a path that others globally have traversed before. We can learn from those experiences. What types of resources do we need? For example, work plans, you're going to see the collaborative model in other work plans, such as the comp committee that's coming up. And obviously, since it's part of the strategic plan, you'll see it in the business plans that will come forward to the board. Near-term resources, there's an item talking about an early drawdown of employees for us to hire roughly 27 people within this fiscal year, 2020. So that's hopefully a summary. I'll pause here. And
that's very, very helpful. Paul and Mike and Scott for the presentation. The way I think about this is, there's a vision which we've talked about, and we're at a point where it's really about implementation and execution in an ever more complicated and competitive world. And ultimately, the belief is that if we can implement and execute properly, that it will have a positive impact on the long-term returns of CalSTRS and to pay the benefits to our members. I often think of things in, as you know, sports terms, and the most talented teams don't always win. They don't, right? There's common themes of continuity of leadership, a shared vision, whether it's raising Lombardi Trophy or returning 7% over 30 years net of fees. It's people knowing what their jobs are. It's not creating unforced errors. It's being someone who you want to be with and partner with. So there's a lot of similarities and creating these long-term strategic partners. But at the end of the day, if you're in the locker room, everyone has the plan to win the game. Everyone thinks they're going to go out and win the game. But to execute the game plan as flawlessly as possible is really, really difficult. And at the end of the day, it comes down to the people who are on the team. So this is a great vision, and I think what you've done and the team has done what I like about it is really you using common language. You've identified some risks that are associated that we might be able to mitigate or not, and have helped us along the way. But we're spending time and resources on this because we believe if we can implement it properly, if we can source the right talent and we can build the long-term competitive relationships and trusting relationships across the globe, that competitive world that we live in, that you articulate and outline for us, we believe if we do those things right, we'll be well positioned to reach our long-term return objectives. That's how I kind of see it. So what I like to do is hear from committee members. This is an information item, but there might be some thoughts about suggestions, et cetera, or questions. Joy, then Bill, then Sharon. Joy?
Great, thank you. So yeah, thank you again to everyone. Scott and Deborah, I know that you've been doing a lot of the pulling the oars to get things moving and keep things moving, as well as working with, with Jack and Cassandra, Lisa, the leadership team on putting this in the strategic plan and how we're moving forward. I just want to make one comment about Harry's analogy to this being like a sports team and say the one thing we can't do is deflate footballs in the locker room. No cheating.
I knew it was going to be a new incident. I mean, now they're together. This is.
So, Jack actually kind of teed this up
Wow.
when he identified.
Wow, Joy, wow.
I couldn't resist. I couldn't resist. When Jack talked about the big three, and it's interesting that for all three, there's the number 300 million is associated with that. With pension solution, with the building, and with hopefully what we'll be able to see. To see the returns coming back to us if we execute this well. So along the lines of, what we're already doing for pension solution, what I think Lisa and team are planning as we move forward with the building project, I guess I wanted to suggest that we look at this as the third big project and have, I know that you're still working on the project plan, the priority list, and we'll be getting more details on that front, but having some regular reporting back to the investment committee that indicates how we're doing on plan, in terms of how we're doing on budget, how we're doing on schedule or milestones. I know that some of the contingencies that we have are external and maybe things that we cannot change. We can try to influence, we can try to manage some of those external issues like state procurement rules or state hiring rules. But I also gather some of them are internal, so if we can make progress on those and understand how we're making progress, I think that'll be, this is I think a critical initiative to the investment committee and to the board. So seeing that kind of reporting, again, not necessarily getting into the weeds of everything, but really understanding at the appropriate timeframes how we're doing sort of on plan. I wanted to suggest that.
Well, thank you. I'd like to take you inside the locker room and tell you that we have organized on the investment staff teams around each of these pillars to develop these priority project lists and to interact with the rest of the organization. So I really enjoy your comments. I think that we want to seek accountability. We'll bring this to the board in September. And that'll give us enough time to complete those project lists and prioritize. And I think that it'll be perhaps akin to what you've seen in the pension solutions and how that's laid out as a project plan. So thank you.
That would be terrific. I don't see any, just to be sure, consensus-wise, the committee's comfortable with that accountability and transparency. We'll leave it to the team to let us know whether you think it should be quarterly, semi-annually, but I think something akin to the pension solution updates for the committee on the progress on these four pillars would be terrific. Appreciate that. Thank you. Joy. Anything else, Joy?
No.
Bill.
I'm going to demonstrate that I am the new guy on the block. Could you, for me, just make a list of the regulatory and statutory hurdles that you confront that are going to make this task even more difficult?
Sure, yeah, we'll do that.
Thank you, Bill. Sharon?
This might piggyback on Joy's recommendation of the regular reporting, because I was curious about just at some point getting a little more definition around when we're talking about hiring the 27 staff. And I'm thinking about like Lisa and her team, and just, is that 27 investment staff, or are we thinking about support for other, just other places that are going to have some strain? So you don't have to answer today necessarily, but maybe in that reporting, you could give us a little bit more of a sense. I think I'm sensitive, just to, there's a lot going on, and these are big projects, and wanting to make sure we're staffed up in all of the right places. And I trust you guys to figure that out. That's not our job, that's your job. But it would be helpful just, to get a little bit more of a sense of, with the hiring, sort of making sure we're supporting folks that might be a little overextended in those. And then also just more understanding about the specialized consultant. We have a lot of consultants. And so, just thinking about what value, Makita, I don't know, right? But in terms of what that role would be, what the value is added to the conversation, I mean, is that specifically, someone that has experience in leading other institutional investors around the collaborative model? Is that the idea?
Yes.
Okay.
Yes. There are consultants who have a wide range of experience in that specific role, where others around the globe have traversed the same ground. And it's a great sounding board to have to understand what others have done. We can collect that information, but it's difficult for us to do that with all the other activities we have going on from an investment perspective.
Yeah.
So it's really around that. The 27 that we listed actually were all for investments, and
Okay.
I'm just following on an item that will be in the TRB. I think it's 13E. 13E, yeah, thank you. But to your point, work has been done in considering all of the resources that are going to be needed as we throw that rock in the pond and it causes the ripple effects. So we've been having a lot of discussions about that topic. So we'll provide some transparency as we move forward in regards to the other resources too.
Thank you.
Thanks.
Don't see anyone else in the queue. Thank you again for the presentation, and you've got some expectations in terms of reporting back to us on the progress.
Yep.
Thank you so much. Item 10 is an information item. First reading of an information item. April Wilcox, come on up, April. So we're not being asked to adopt these changes today. They're information. Certainly if some questions come up, staff can make note of them, and then we'll come back in, what are you thinking, in July, April?
Yes, we'll come back in July.
Okay, so your item, there you go.
All right, we will be brief and efficient. That's what
Appreciate-
operations does. So I'm April Wilcox. I'm your investment operations director. I have with me Matt Schroeder. He's associate portfolio manager. And I do have to give a shout out to Harmony Liu. She is not here. She's on maternity leave, but she did a lot of work on this project. So definitely have to bring her up. Last year, the board had requested that we look at all of the investment policies to try to come up with standardizations. We started implementing some templates last year. So this is a continuation of that project. This time, we are looking specifically at the trading limits that are within the investment policy. Like Harry said, this is information only. This is just to give you guys a little flavor of what we're going to be bringing back, just for discussion, just for a little bit of education. Internally, we have extensively reviewed this. We have talked to several auditors. We've also talked to your board consultant, Makita, and they have provided an opinion memo that is an attachment, I believe, on 183. Just in preparation, so we can have a good discussion if you want to.
Yes, it is on 183. The Makita memo is on 183. Thanks.
Just spending a few minutes just on background, your investment policy management plan, that's the overarching document that will list the investment delegation. The investment committee will delegate some of the investment discretion onto staff. And we view investment discretion in two main themes. The first theme is about entering into an investment transaction. So, high level, that is, entering in a contract with a new global equity manager or entering into a new private equity partnership. Those are reviewed and signed by the CIO or his delegate, which a lot of time is the deputy CIO. The second theme is regarding the daily trading limits that are within the portfolio. So that's like buying an Apple stock inside of a portfolio or sending out a cash wire for already committed private equity partnership that's already been signed off for. That's what we're focusing on. We're only focusing on the second piece, which is around trading limits. Okay, so it's an important distinction. And the way we look at it in operations, when we're looking at public and private assets, we look at it a little bit differently. So public assets, those are your stocks and your bonds that you're used to. Internally, they're traded on a trade order management system. We have robust compliance rules coded in, and the trading and approval limits are coded into the system, completely automated down to our custodian. And so reviewing the trading limits of the public assets, because we do review these periodically, we are not requesting or discussing any changes to those. When we're looking at the private asset class, however, it's different. You're not sending out a security and receiving cash simultaneously by an exchange at the same time. These are usually, we enter into partnership agreements or fund structures or investment agreements where we're committing capital, we're committing cash, we're later receiving a request to wire that out to the custodian. So it's a little bit different process. When we are reviewing, and let me point out before I lose track of this, we do have 3 asset classes that we consider hybrid asset classes that have both public and private. And I'll give an example, RMS, they have long treasury portfolio. Those are US treasuries, they're managed by fixed income, traded by fixed income, so they'll follow the fixed income trading rules. In contrast, we'll have global macro in RMS. Those are partnership type structures. Those are where we'll wire out cash, and they will follow more of the private asset side. So in the private asset side, we have reviewed them. We found a few areas where we're going to propose some standardization. And this is basically so we can have full automation in our wire system to our custodian. So we have tighter controls to mitigate operational risk. So Matt will just spend a couple minutes just discussing high level, and you can ask questions if you want any more detail around these.
Thanks.
Great, thank you, April. So as April mentioned, we reviewed the policies for the private asset classes, and we are just going to focus on the outgoing of wires to an external manager to fund the previously agreed upon agreement. So we looked at the methodology, and we noticed that across the private asset classes, there were slight variances in the methodology. As part of the methodology, there are policies that use a % of the net asset value of the fund to create a limit. Others use a fixed dollar amount. And then off of that, there are some of the policies have a daily transaction limit, meaning if you had a limit of $15 million, you can only send out multiple tickets if they were less than $15 million. Others have a per transaction limit. So our goal here is to make it standardized, have it be a fixed dollar amount, and then a daily transaction limit. We feel that's the best way to go. Next is we look at the language of the approval process and the policies. As you would expect, they're written over a period of time, and so they're all going to sound slightly different. The intent's the same, but they're just written differently. So we would like to standardize those so they're the same and would be consistent across the various policies. Third is the limits. So when you look at the next slide, we bring that up, you're going to see that across the asset classes, they all have slightly different limits by title. We think there's a lot of value in standardizing those and making them the same across the board. So that being said, when we're thinking about this project, we thought that how do we want to set ourselves up best for the future? So we're expecting the NAV or the net asset value of the fund to increase, the size of the individual portfolios to go up. So how do we build approval limits that will support that? So then we went back and looked at the daily transactions and the size of the transactions and found that, in our opinion, these amounts would support staff to do their work without having too much obstruction. We also feel that by standardizing these limits, that it increases our operational efficiency that April mentioned, strengthens our internal controls, and allows us to build some more automation. Also to note, as April mentioned, that the board's investment consultant has had a chance to review this proposal and is supportive of these limits.
Thanks, Matt.
Yeah, and I do want to remind you that these are these are already approved deals that usually Chris or Scott have reviewed. And there has at least 5 different reviews before a wire goes out internally. So we have a very extensive control process, but a lot of it is a manual process because we don't have consistency across all of these asset classes. And so part of our job is trying to review operational risk, and this is one of the areas that we noticed we should fine tune and do a little bit of standardization for. So just yes.
Why don't you do a close to summary, Dana, is it okay?
Yep, one last slide, but I can.
Why don't you
Okay.
finish, April? Yeah.
2 minutes and I'll be done.
No worries.
So one of the things we also want to do is instead of having the trading limits and all of the individual policies, we want to just move them up into the investment policy management plan, the overarching document, possibly in an appendix. And then instead of having 7 different versions for the public asset class, we want to have one version across all, private, one version across all of the private asset class that summarizes all of our proposals into one. Other than the IPMP, there is also the delegation of authority that goes to the board every year, usually in July, and that's presented by Deborah Smith, the COIO. And this is a separate document that will outline all of the discretion on both themes that I talked about for the board as well. So I'll pause here and take questions.
Thanks, Matt. Thank you, April. Do have a couple of members of the committee, Dana and then Karen.
So in taking a look at the dollar limits, if you want to roll back a couple slides. Some of these are big jumps, say like from CIS from 25 to 100. The directors going from 100 to 750. So what I think I heard you say is you took a look at what those what the actual trading was and you tried to adjust the amounts to what it was we were actually doing, right?
Yeah, and one of the things I want to point out, the biggest jumps here, some of the smaller asset classes, yes. Also, when we're reviewing the process of reviewing these capital calls and these notices, it's the same process that an IO2 in real estate would do as an IO2 and CIS would do, the same amount of controls. As well, if you have somebody who has different limits across in the platform, we can't automate it. So standardizing the limits across adds it.
I totally get the whole automated. I'm just curious what justified some of the bigger jumps. And then going back to the investment officer 1, it's the only category where it was reduced. So is it, I'm curious if it should be 20 instead of the 15, or are we basing these on what our actual experience was as we're making these exchanges?
Do you want to answer? You want me to go? Okay.
That's fine. So we looked at the historical data. We looked at the number of transactions per day and the dollar amounts. And so at the IO1 level, as April had mentioned, let me back up, all these transactions are going to be reviewed 5 different times, right? So the IO1s typically aren't just sending money directly out. There's just going to be an IO2 that's going to be reviewing that in the asset class, then it moves into operations. So we feel that 15 million gives the IO1 enough bandwidth to operate on a daily basis. And then your point towards the increased amounts. Sure.
Before you go, so that means that if there was a necessity to have something larger, they could go to an IO2 who could do it.
That's the standard process.
Alrighty.
The IO2 would have to do that.
That would have to, because of the dollar limit.
Correct.
Okay.
Yes, and so we based on looking at the historical analysis.
Right.
How often does an IO1 approve? And what is the average dollar amount that is that? What is the risk of the IO1 versus what are we comfortable with an IO1 approving? What would we rather have another set of eyes to look at?
Got it.
And when you look at the transactions, I mean, the things that fall into that, sub $50 million category, they tend to be more operational within that asset class. It's a management fee. It's something along those lines. Whereas when you get up to the larger amounts, the 250, the 150, those are new transactions that probably best have eyes from the PM or the director on that.
I just want to make sure people have the ability to do what they need to do.
Absolutely.
And I'm totally behind the whole automated thing.
Great.
Super, thank you.
Thanks, Dana. Karen?
I just wanted a little bit of clarity in Table 2 versus Table 3. Because, well, I noticed that it's the approval limits, so you have that, it's all in the chart, right? But then
Oh, table.
number 3, on table 3, it's the daily limits for everybody across the board?
So table 2 is your current. This is what we currently have in place. And then the proposed limits will be a daily dollar amount limit. Table 3 is just taking that and showing you an idea of what it would look like as a proposed final product.
Okay.
So when we come back in July, you will see something similar to table 3.
Okay, so it doesn't matter which asset class they are?
Not for the publics. The privates will remain the same, but the
Right.
publics, doesn't matter what asset class, we want to follow same trading parameters. Table 3 would apply to all of the privates.
And that's what you mean by standardizing
Across, yeah.
across? Okay, thank you.
Thanks, Karen. Seeing no one else in the queue, this item will come back. There's an accompanying memo from Makita on INV 133, 134. The big takeaway for me was the last sentence in the first paragraph as to what the purpose of why this is being brought forward. Makes sense to me, fully support it. I would just ask that when it comes back in July, that if there's a view that the committee's oversight responsibilities or anything we need to do in our oversight role to monitor these changes, if in fact anything has to change for what we do, I'd like to know what those recommendations or what that recommendation is, or if there's nothing that we need to change in our oversight role with these changes, just state that for us as well, okay?
Okay.
Is that clear?
Yep,
All right, good.
thanks.
All right, thank you, April. Thanks, Matt.
Thank you.
Thank you. So this is the review of information requests.
Great. All right, so the board will be receiving ongoing information about benchmarks as a part of its continuing education. Mr. Prasad requested a list of regulatory and statutory hurdles to the collaborative model. Ms. Hendricks requested information about staffing and also the specialized consultants that would be needed for the collaborative model. And then as a part of the last item that we just heard on the policy trading and wire limits, the board requested information on how its role would be, what its oversight would be like with the adoption of that policy or implementation of that policy.
Thank you, and we'll leave it to the discretion of the staff to determine whether or not those requests can be just sent to us as information in an email, or will they be incorporated in a future agenda item. But I do think there was one specific request that the committee wants to see either semi-annually or quarterly, is the oversight of the progress made around the 4 pillars that was identified as potential risks to the successful implementation of the CalSTRS collaborative model.
Okay.
So that request in particular, we actually want to report to us akin to what we see in the pension solution project.
Okay.
Okay? I think everyone else's requests were captured, is that right? Good. All right, thank you very much. Chris, you want to talk about the draft agenda for July of 2019?
Yes, in 185 and 186, we'll move a few things around, but it's pretty darn straightforward. There aren't any changes at this point. The one thing I would highlight, this is the point of the year at the beginning, your first meeting of the new fiscal year. So this is our first New Year's party. We'll bring back our business plans, which for the investment office really focus in on the next 1 year. And clearly the theme will be implementing the collaborative model and around those 4 pillars. So we will do it as we've done before, which is very streamlined, basically 1 page double-sided for every asset class, as well as our long-term financial plan. That's it.
Thank you. Opportunities for statements from the public. Michael Ring.
We know that guy.
Michael.
It needs to go on.
Someone help Michael with the microphone.
Technical assistance.
Is it on?
Is it on? There you go.
There we go.
Thanks, Mike.
Michael Ring with SEIU's Capital Stewardship Program. Hello, many of you who know me. Welcome. Nice to meet many of you who don't know me. So I'm here today to speak. I appreciate the opportunity to speak with you. I'm here to speak. This board and Jack and Chris and a bunch of you received a letter from some Uber and Lyft workers. I have 3 minutes to try to summarize that letter. It's a 9-page letter. I will do that in less than 2 minutes, or Sarah will pull the plug on me. So it's been a long day here, I know. I think the letter really explains why this is irrelevant. The workers are raising issues that are relevant to pension funds, to CalSTRS, but to many pension funds in the state of California. In particular, there are certain two groups where it's relevant. The business model that these companies are using is really a threat to public budgets. There's a lot of tax subsidies that these companies are gaining. There's a lot of use of public infrastructure, and their business model and their own IPO statements, the one for Lyft that's already now out and trading, and an Uber that is coming, they actually indicate that they have no plan to address the fact that that is something they need to address in their long-term business model. So that's a problem from the public budget side of the equation, which is obviously central to your 3 stools of funding: employee, employer, and then on the investment side, the concerns are that there are many risks on the investment side that these companies also acknowledge in their own statements that they do not have a sustainable business model. So for a long-term investor, as they come into the public markets, and you may or may not choose to buy it, but you may eventually be exposed in the indexes, you have certain concerns around this because no investor wants to buy high and sell low. And so obviously there are things your staff is fully aware of, the request of the workers, and they apologize for not coming. There were some serious logistical challenges in them being here, so they asked me to say it for them as SEIU is supporting them in this work, is simply for your staff to do the usual great due diligence it does around these issues, and then as appropriate, engage the companies in the questions you engage with many companies on related to the long-term sustainability of their business plan as part of your fiduciary duty. So appreciate the opportunity to speak with you all. Happy to answer any questions offline or facilitate you talking with the workers if that's helpful. And it's been a long day. Thank you for your attention.
Thanks. Thank you, Mike. And confident you can navigate with the right staff people to continue the appropriate dialogue. Thank you for bringing the matter to our attention. So that brings us to the end of our open session. We do have some closed session items. Take maybe a 5-minute break and then come back into closed session. We'll be here, and then a portion of the closed will go to the back. So we'll start here, though.